Coming up on Market to Market, biofuel backers put the squeeze on the EPA. The Secretary takes a Cuban delegation on a homegrown tour. And government reports move the dials in the commodity markets. Those stories and market analysis with Elaine and Walt Hackney next.
Funding for Market to Market is provided by Renewable Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Renewable Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, June 10 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Renewable Fuel, a longtime political football, has gained support from presumptive nominees Hillary Clinton and Donald Trump as they approach their party's conventions. The underpinnings of this platform plank are part of the Energy Security and Independence Act of 2007. The 10-year-old federal mandate specifies how many billion gallons of biofuels must be produced in any given year. In 2015, the Environmental Protection Agency, the body charged with administering the measure, cut biofuel production levels considerably. Last month, the EPA slashed the original 2017 mandate of 24 billion gallons by 20%. This week, the EPA got an earful. Paul Yeager reports.
The Renewable Fuel Standard is one of the most successful energy policies adopted by Congress.
E15 and E85 are not answers to the ethanol blend wall.
Alternative fuel has long garnered passionate commentary. And that was the case again this week in Kansas City as the Environmental Protection Agency gathered responses to the proposed 2017 Renewable Fuel Standard. This was the only public hearing where officials will record oral opinions in response to the volume obligations announced in late May. The witness list was proportionally skewed to pro-biofuels.
Now is not the time to back away from the ambitious yet achievable goals of the RFS. If we want our nation to lead with the production of 21st century fuels for 21st century vehicles, we need the agency to modify this rule before it is finalized.
Our nation's farmers have responded to the demands of an ever-growing world and to produce an abundance of crop used to feed our people, our livestock, and fuel our cars.
Ending our dependence on fossil fuels is among the great challenges of our time. Changing the way we power vehicles requires bold, aggressive action, and the RFS is the most effective policy we have for accomplishing that.
The EPA recommendation calls for 18.8 billion gallons in renewable volume obligations, with 14.8 billion gallons slated to come from conventional biofuels like ethanol. The commitment from cellulosic biofuel is 312 million gallons, and advanced biofuel is at the 4 billion mark. Overall, this is an increase of nearly 4% over last year and a 15% gain since 2014. The American Petroleum Institute was one of the few dissenters in the morning's panels.
EPA's proposal to reduce the RFS volumes from the unattainable statutory levels is appropriate and necessary to avoid near-term economic harm. Until Congress repeals or significantly reforms the RFS, EPA must continue to address this outdated volume requirement by exercising its waiver authorities.
Upon release of the recommended standard, the American fuel and petrochemical manufacturers called the proposed volumes beyond marketplace realities and hopes that Congress will step in and reform the broken program.
Today we have an all-star lineup of biofuel advocates.
Proponents of the homegrown fuel arguing for an increased RFS gathered industry leaders, politicians like Nebraska Governor Pete Ricketts, and TV stars Chris Soules of The Bachelor and Brian Sowers of Crappie Masters to lobby on behalf of the industry.
It's simple to me, and I think it should be simple for everyone in the EPA and throughout all of America to understand the benefits that renewable fuels has on this country.
EPA does not understand what this program is all about. The proof of that was when they released the RVO in May, and an EPA spokesperson said, these numbers are achievable given the realities of the marketplace. Given the realities of the marketplace, what are you talking about? The RFS was intended to change the reality of the marketplace. The RFS was intended to make oil companies and gasoline marketers do that which they otherwise would not do.
Comments are being accepted for the next month, and a final ruling is expected by the end of the year. For Market to Market, I'm Paul Yeager.
Cuba lies 90 miles south of the United States. Despite a nearly 6-decade-old embargo, trade relations have tempered somewhat over the past 15 years, allowing for the export of a few American products. Last November, a U.S. agricultural delegation traveled to Cuba as part of an effort to remove the last barriers to trade. In exchange, high-ranking Cuban officials were invited to visit the U.S. And recently, Secretary Vilsack made good on his end of the bargain, hosting Cuba's Minister of Agriculture, Gustavo Rodriguez Ruggiero. Josh Bittner explains.
We have a tremendous opportunity in Cuba to expand exports of soybeans and rice and poultry at some point. They in turn have a tremendous opportunity to import into the U.S. organic production. Trade must be a two-way street.
Last week, USDA Chief Tom Vilsack hosted a Cuban agricultural delegation in his home state of Iowa. The historic event gave the group a glimpse into agribusiness diversity in a region that leads the U.S. in several farm production sectors.
The ambassador wanted this guy to go to Virginia. I said no. He's coming to Iowa.
Thank you.
The reciprocal visit follows the first American presidential trip to the Caribbean island nation since 1928. There, both countries signed a memorandum of understanding to collaborate on agricultural research and ideas. In Iowa, dignitaries saw a high-tech greenhouse at seed giant DuPont Pioneer, where staff stressed the importance of research and genetics for improved yields. In the past, Cuba has been relatively isolated from crop technologies like genetically modified seeds. But a stopover at fifth-generation farmer Aaron Lehman's organic operation offered one way Cuba's farmers could use past seclusion to their advantage.
If we have a certified organic crop, we will typically receive an extra 50% to even 200%.
Lehman has been converting some of his farm's conventional acreage to organic over the past decade. And while the 3-year regulatory transition period can come with a financial pinch, a steady 15% annual increase in U.S. demand for organic products makes the move worthwhile.
The reality is that there are not very many families like Aaron's. So we are having to import.
But relations with the communist nation are still subject to a U.S. embargo, which has been in place since 1962. Obama has called the law a Cold War relic, but the chief executive is legally powerless to cut trade sanctions. As lawmakers contemplate the issue on their own timetable, Vilsack says USDA has authorized the use of commodity checkoff dollars for education and training to continue momentum.
I'm optimistic and hopeful that the Congress will at some point in time lift the embargo.
Since 2001, a diplomatic defrost has allowed limited U.S. farm and food exports to Cuba, but the market is volatile. According to the U.S.-Cuba Trade and Economic Council, agricultural shipments to Cuba peaked in 2008 at $700 million. Meager by comparison, 2015's $170 million total has been attributed to uncertainty and increased global competition.
That's 20 years old? Yes. We try to take care of it.
50 años.
50 years. 50 years. 50 years. 50 years. They know how to take care of a tractor.
U.S. officials say untangling credit barriers would allow Cubans to purchase new items like American tractors, many of which they currently own are as long in the tooth as the island's well-known classic cars.
We believe that there are many areas of agriculture in which we have common views.
Lo que nos resta es seguir estrechando la colaboración.
And what is left to be done is to deepen our collaboration.
Cuba's agricultural minister echoed the sentiments of his American counterpart both on the farm and at Iowa State University, as the delegation explored the institution's commitment to research and business growth while educating the next generation of farm leaders. A culmination of knowledge and discipline rounded out the groundbreaking day at a nearby ethanol plant. Lincoln Way Energy board members explained how Iowa's biofuel production model creates multiple-use products, jobs in rural areas, and helps the auto industry comply with mandates on fuel economy.
We've used this corn just like a barrel of crude. We take it apart, and we have food and fuel.
And the best way to get to higher octane fuels is blending more of that.
While USDA lays the groundwork for robust agricultural trade with Cuba, critics contend the former U.S. adversary has a plethora of other issues to iron out before normalized relations are fully realized.
There will always be differences,
Siempre habrán diferencias.
but they don't necessarily have to prevent us from having a relationship. Abraham Lincoln once said that the best way to eliminate an enemy is to make a friend. I don't know of anything more powerful in making friendships and eliminating past challenges than agriculture.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market Report.
Changes in weather patterns had more of an effect on the commodity markets than Friday's USDA report. For the week, the July wheat contract spiked 20 cents on the news, only to settle nearly even with last week, while the nearby corn contract gained a nickel. Forecasts of 90-degree temperatures in the grain belt pushed the July soybean contract 47 cents higher. July meal ended a 9-week run of gains, dropping 30 cents per ton. In the softs, July cotton rose 83 cents per hundredweight. Over in the dairy parlor, July Class 3 milk futures bumped up 74 cents. In the livestock sector, the August cattle contract lost 45 cents, August feeders fell $1.13, and the July lean hog contract shed 28 cents. In the currency markets, the U.S. dollar index expanded 53 points. July crude moved 45 cents per barrel higher. August COMEX gold gained $33 per ounce, and the Goldman Sachs Commodity Index rose nearly 5 points to finish the week at 379.40. Here now to lend us their insight on these and other trends are two of our regular market analysts, Elaine and Walt Hackney. Welcome back, everybody.
Pleasure to be here.
Elaine, we want to get started with you. I want to talk about this wheat market. We did see some volatility this week in wheat, but it ended kind of in a slump. Where do you see it going from here?
Depends on which wheat we're talking about. Like that slump that happened today might have been related to the U.S. dollar going higher. Wheat, for some reason, tends to be more sensitive to fluctuations in the U.S. dollar. And, you know, the report was not that bearish for wheat. It was only really very minor adjustments made to the supply and demand on the USDA tables today for wheat. But it was, you know, a reminder that they're having very good yields as they're harvesting through northern Texas and up into Oklahoma. Very good yields, very good test weights, low protein. So that brings me to, you know, I said, which wheat are we talking about? Spring wheat could get some bullishness if there is demand for blending in that higher protein spring wheat with the lower protein winter wheat here in the United States. Spring wheat could also get some bullishness from this drought that is continuing in Canada. Alberta still has drought. It's spreading into Saskatchewan. So there are some things that could make you think that spring wheat might be heading back towards $6.
So if you're a spring wheat grower, you're just going to hold here.
I would not sell any spring wheat until, let's not get too greedy, because yes, there's overwhelming stocks of wheat. Like the stocks to use ratio in the U.S. is 50%. So half of all wheat in the United States has no home on the USDA table.
But as this winter wheat is coming out of the field, how do growers handle that situation?
Yeah, I don't have a lot of optimism there. We are seeing the carry spreads. There's 42 cents between buying that winter wheat in July and holding it until December. So it might make sense for the farmers to capture that carry by storing on the farm if they're capable. Other than that, not a lot of optimism.
Okay. All right. Probably just go ahead and pull the trigger. I mean, with where we're at, save on the storage, lessen some risk.
Maybe. Yeah.
Okay, all right. Way to dodge the question, Elaine.
It depends what the dollar does, honestly. There's volatility in there, sure.
Okay, so you're really watching the dollar as for indications on this wheat price. Yep. Well, let's see if we can pin you down a little bit harder here on this corn market.
Okay.
Old crop corn, we're seeing some strength. We're seeing some spillover support from soybeans. Are you cleaning out the bins yet?
I think you should be. I think that you really have to have a plan to get rid of not only old crop, but also really look at your pre-harvest hedging for new crop before the end of the month. Like, we expect to see a seasonal rally May, June, July timeframe. We have seen that rally. These prices are so much nicer than anything we had a reason to expect in March. And let's remind ourselves, this 90-degree weather in this stage, I don't think that really matters. So let's remind ourselves that USDA report today said 14.4 billion bushels of corn, big crop. And I think that's correct. We're going to have a big, ample crop. Let's not get too greedy. Let's not expect a harvest high. Let's get some selling done in June.
So these concerns about the La Nina developing, you're willing to push off a little bit?
No, I think those are legitimate concerns. But as I understand them, that forecast is more towards the last part of summer. So that's, if you are worried about La Nina developing in August, that's a soybean story, much more so than a corn story.
Okay. $4.50 corn. Can we be that greedy? New crop?
For some of your bushels, but I don't think that you should sit and wait and leave everything unhedged. There's so much risk that the dollar could go crazy because of the Brexit vote on June 23rd, that there's a lot of speculative money that is long in soybeans especially, but also corn. So if these markets start to fall apart, I don't think you're going to want to catch the falling knife, as they say. I think you want to be proactive.
Okay. Would you be re-owning any of those sales with calls at this point in the market on new crop corn?
No, not necessarily. I don't think there's that much upside when we're looking at a 14.4 billion bushel crop at this point.
Okay. Now, Walt, I wanted to turn to you for a second. We do have this break. Corn is continuing to find strength. Wheat is continuing to pull back. Are you hearing cattle feeders start to roll more wheat into the ration?
Absolutely. There is discussion. Physically, I haven't ran into it. You have to have a pretty astute nutritional background in order to supplement a ration with wheat.
Okay.
You mentioned volatility. It's a volatile grain to put in a ration, and one of the old standards that we've used forever in the rationing of cattle is you do never use more than 41% of your ration as wheat.
Okay.
It's simply too high in protein, and it burns the livers, it abscesses the livers if you go beyond that level.
Okay.
So you have to be very careful regardless of its value going into the ration.
Gotcha.
It may cheapen your ration. It may help you in that regard. And the cattle may gain well on it, but when it comes time to sell them, and the packer comes back to you and starts complaining that he wants some restitution on abscessed liver, that's a different story.
Could be an expensive way to cheapen a ration.
A very expensive problem.
All right. Well, Elaine Cubb, want to come back, talk about the soybean market. It has been incredible over the past 8 weeks. And I want to start with a question from Phil in Ontario, Canada. He notes that we have seen a lot of outside money flow into soybeans. He's asking, how long does this investment capital continue to flow into ag commodities?
He's really touched on something there, and we mentioned it already, is that there's the commitments of traders, there's about 20 positions that the speculators have long in soybeans for every one position that they have short in soybeans. So they are very, very long, longer than they've been since 2012, or really since this modern time frame of trading soybeans in this post-ethanol era. So they're hugely long, which means there's great risk that whenever it does turn around, that they will suddenly, all bail out at the same time. And they're being led, they're not as long in soybean meal, but this whole rally has been led by soybean meal, which is the same story of the livestock feed rations globally, not just in the United States, but China and everywhere, where we're crushing the soybeans is very profitable, and that's what's leading this rally.
And this was the first week in 8 or 10 weeks we saw the divergence between the underlying bean contract and meal. We saw meal pull back while beans ran higher.
Which is weird, yeah.
Is that to you an indication that maybe we're toppy in here on soybeans?
Yeah, it makes you think that it's irrational a little bit. Like I said, they're so long in soybeans, and they're not long to that same degree in soybean meal. So it feels like the story got lost in translation somewhere here when the fund started to get into it. So yeah, I think there's a lot of risk. I think there's a lot of downside risk in soybeans for all of these reasons, and there's also upside risk in soybeans for that La Nina reason.
Okay.
So I think there's more volatility in both directions possible for soybeans in the next few months.
So if I'm a bean grower, how aggressive should I be with physical sales, cash sales right now?
I want to say really aggressive because of that downside risk, but I also want to say, hold off the gas a little bit because of the August situation. So maybe this is a good scenario for puts, sort of leaving some upside open.
Puts rather than selling the physical, buying back calls.
I like that too, actually, because I'm not expecting to see, a major increase in the cash market, right? Like we might as well just take what you can get from your basis bids, for your new crop bids, from your local elevator. If you know you're going to take it there at harvest, just do it. Just pull the trigger. Okay. All right. Well, now I want to turn over to Walt Hackney. We've got a question from one of our viewers. This was sent in via Twitter. This is from Dan. And Dan is wondering, which, in your mind, is more likely? October live cattle at 100 or October live cattle at 130?
That's a loaded question, obviously. And from a non-professional comment, I would say that your best opportunity would be gamble on the $1.30 fat cattle.
Okay. You think we've maybe hit a trough in here and we're going to bounce back a little higher?
I think the potential is there. We hit a $1.28 today, a $1.29. We had 207 and 208 dressed. West Texas, $1.28. Nebraska, $1.28. 29 maybe, heard as I was coming into your show. And that's been a while. They had been bidding 125. The dressed beef cutout took some moves up, which was a unique thing for the dressed beef. It's been sluggish. It's been dragging for, it seems, all season. And it seemed as though it started showing strength. And it was interesting, very quickly, Mike, it started showing the strength when hogs started to become less stable than they have been for quite some time. And as you are very aware, the hog market has become a little bit unsettled in the last 10 days. And as a result, maybe we're looking at the potential of beef now as being not necessarily a domestic usage, but maybe there's an increase in some of the export that's helping it.
We could start to see international demand play a bigger picture.
Possibly.
Okay, so you're banking on the bull side of this market. There's more opportunity to the upside than the down.
I hate to say gambling, but the fact remains you still have a very difficult time of hedging, if you will, in the cattle industry. You buy these feeder cattle regardless of the current market, which is considerably lower than it had been for a long time. Those cattle, at the best chance you have the last 2 weeks, will not work in a hedge. It just won't happen. And part of the problem is a cattle feeder is astute enough to understand that as this corn shows strength and his feed costs go from 65, 67 up to 80, that makes an enormous difference when you take a calf weighing 7 and market him weighing 14, that feed cost, that extra corn price is going to hurt you.
So do you see them really starting to put some pressure here on feeder cattle prices going forward?
No.
Okay, they're still competing.
I think we've hit, if we're going to see, quote, a low in the feeder cattle, I think we may have been there.
Okay.
And no, I think that it's going to retain the level we're at.
Okay.
Or maybe get stronger.
Okay. Well, now let's come back to the lean hogs. You talked about how that market, we've seen it climb and have a lot of strength over the past 3.5 months. You mentioned it's gotten a little unstable. What do you think is driving that instability in the lean hog market?
Well, it certainly isn't in the competitive race between poultry and beef. Pork is still the meat of choice in regard to your domestic consumer. Chicken, obviously, is the leader. And then you have pork, and then, of course, down and far away is the beef usage. So, to answer your question, it would appear that there must be, it's going to be interesting to see the reports on export.
Okay.
I have an opinion on that, and I think that the Chinese and so forth and Japanese import or export, if you will, of our pork is going to be somewhat saddled with some extraordinary export and import of beef.
Okay. We'll see them switching a little bit from pork into beef.
Yes.
Okay. Well, thank you so much for joining me, Walt Hackney and Elaine Cubb.
It's been a pleasure.
That wraps up the broadcast portion of Market to Market, but Elaine, Walt, and I will keep the market conversation going, including answering more of your questions during Market Plus, available on our website. And like us on Facebook. You'll find links to some of our videos, and you never know when we might go live for a behind-the-scenes report. And join us again next week when we'll examine how one dairy family improved their bottom line by taking a direct path from the bulk tank to the doorstep. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Renewable Fuel. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Renewable Fuel, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.